Hi, guys, and welcome to the 46th episode of the Weekly Trading Podcast. We call it the WTW Weekly Trading Wrap Up, where we talk about the weekend markets from a trader's perspective, what to focus on and what to ignore. Okay, we start with the S&P 500, chart of the S&P 500. The red arrow denotes this week, starting on Monday, the 29th of September, and Tuesday, Wednesday, Thursday, Friday, finishing on the 3rd of October, an up week, finishing near highs. Okay, so fantastic. The trend continues. The trend is your friend. Stay with it. Let's get rid of this arrow. So let's go with the technical picture. As usual, we start with a technical picture, and as you can see, bullish. Higher lows, higher highs. The market is ripping. It's been ripping forever in a very, very low volatility, low vol environment. This is perfectly normal and beautiful to see. And it stokes fear because when the market goes up slowly, people think, when's the shoe going to drop? Okay, so people are still fairly bearish out there, although not as much as before. Let's see the moving averages. Look at that. Everything aligned. The shorter term moving average to the longer the shorter is above the second shorter, which is above the third, fourth. This is a perfect pattern that you want to see, and price action is above your fastest moving average, and yet people are scared. Okay, so nothing more to add on the technical picture. It's bullish. So let's move on to the sentiment analysis. First thing we look at is the CNN Fear and Greed Index. Where are we? Neutral. Still, we're at highs and we're at neutral. The momentum is fairly neutral because it hasn't gone up a lot. What else do we have? Stock price breadth fear. This is another thing that we'll mention later on, is that this market, people are scared is because a few stocks are participating and not every stock is participating in the market. Oh well, what are you going to do? Sentiment is still neutral, which bodes well with our bullish thesis. And what about the AAII Investor Sentiment Index? Basically a carbon copy of last week, except slightly more bullish. Okay, so we have the bulls coming back on board for the past 3 weeks, finally, which is what we expect to see. But the bears are still there. It's almost like a perfectly equal battle between the two. Okay, it's still way too bearish. This is what you want to see if you're a bull. Okay, you have to get worried when the bearishness gets down to like 20%, 21%, okay, or lower. You should start getting worried. That's why I think this bull market still has legs. We have the technicals that are supporting us and the sentiment that is also supporting us. Okay. So nothing really new to see here. That's the end of our first segment. And our second segment, is always the macro. So as you well know, we got into a government shutdown on Wednesday. And as you can see, the market went up. What does that tell you? Markets hate the government. I don't know. But it doesn't seem to impact this market at all. Okay. However, it did impact our macro because the government is shut down. We didn't get the jobs report that usually comes on the first Friday of the month, the NFP report, non-farm payrolls. We didn't get it. And we also didn't get the initial claims, which we usually look at, okay, which is a very good indicator to see whether we're starting to get in trouble or not in the jobs market. But we did get two important indicators, the ISM manufacturing PMIs, and they came in at 49.1 versus 48.7. So we're contracting, but less so. Okay, a slower speed of contraction, but the manufacturing sector has been under 50, under expansion for a long time in the States, and Trump still hasn't done anything. Still the first year. Let's see, maybe by 2028 you're going to see increases, but so far no impact. And the second thing that came out is, of course, the ISM services, which came in at 50. 52 was the month before. So, as you know, 5-year average, a 10-year average for the services, it very rarely gets below 50. And when it does, we're in trouble. Something bad is happening. So we're starting to like hover around this 50s. The jobs, are like at 50,000 jobs, 30,000 jobs a month. There's a slowing down of the economy. and the Fed is, that's why, cutting rates. So let's see what happens going forward. The PMIs are not very encouraging, especially in the services, but the market is on fire and doesn't really care, the S&P 500. So what to note here is that we are starting to see some kind of a slowdown, but the Fed is forecast, or I would say front running that by lowering rates. That's what they said. Okay, so macro slowdown, but still looking good and okay. Nothing cratering just yet. Okay, so let's go on to the third segment, which is things that interest me. And this week, the main thing that interested me, of course, is what I like to call the Trump critical metals play, or the critical minerals play. Okay, Trump has gone on record to say that he's going to protect critical metals and critical minerals in the States. So he targeted rare earths. So we looked at the MP, which is MP materials, and he did this in the summertime, and MP jumped. Okay, so we have this theme that is going to be overarching and long-lasting, basically until Trump's 2028 term ends, or I should say his term ends in 2028. So this will be a theme going on for 3 more years now. So guys, pay attention. Okay, the market is runs on theme juice. Okay, you have to be in the stocks that are moving, and the stocks that are moving are the ones that are following fundamental themes that are playing out for a long term. And this is one of them. Another one of them is gold. Okay, although the retail is completely not in this space yet, but it is an underlying theme that has been working for a long time. Okay, it's not just a pump and dump. Okay, so and this is one of them. This critical metals or critical minerals play of Trump is the real deal. Okay, and we're playing it with LAC, Lithium Americas Corp. Okay, and you can see on Friday, huge day today. Okay, up $2, closed at $9, opened at 7, and I fully expect, if you saw my report, that will get to the highs around 20, 18, 20 level. Maybe surpass them, I don't know, but I think it gets to the highs by the end of the year, and I'm betting that it does through my option structure that I mentioned before. So when you have these themes playing, you will also have copycats coming along, and today was no exception. The new rare earth play of the day was USAR. As you can see, this is a chart of USAR. This was more than likely a SPAC that came online. And now, yesterday on Thursday, it ripped to new highs, okay? And this stock, if you look at it, it has, oops, sorry, that's the news. Look at the earnings. It has no earnings because it has no revenues. This is just the crap now rising. Okay, you're going to have that with themes. You're going to have the crappy stocks rising as well. But, the trade is to play it. You have to play the breakout and have the stop loss at maybe the previous high or the low of the day. So like if you would have bought at $22.50 on Thursday when it break out, your stop loss would be $18.50, so $2. Keep that in mind if you were to play this. This is how you should be playing breakouts, okay, with risk in mind first. So as you can tell, on Friday it followed through. Now it's up at $25.80. The guys who bought yesterday are laughing and making money. So you're going to get that. It doesn't mean the main point of this episode or this segment on this rare earth or critical metals play by Trump is that just because you have crap like this going up, it doesn't negate the overall theme. It's going to happen to other things, and people are going to front run other metals, other plays that might get a boost from Trump. Okay, which brings me to my second thing that interests me. It's not just Lithium Americas, and which is new highs today. It's not just MP. It's not just USAR, but it's also something very stodgy, old school, copper. Okay, I mentioned a while ago, at the beginning of the month, that I entered copper, a play on copper around this level here. Okay, I entered it before, if you recall, previously, and I got out on this spike. And after this move here, because they were accumulating copper before, I should mention, they were accumulating copper before because of Trump putting on the tariffs, okay? And so they were front loading it, and it spiked copper up from 487 a pound all the way up to 587, which is a huge move for a commodity, okay? But as the supplies came in, boom, it tanked lower. However, I kept mentioning here, I'm waiting to re-enter copper after this down move, having exited it around here, okay? And the reason for that is that I am bullish long-term copper, okay? And the reasons for this are, a lot. They are legion, okay? And as you can see, they're mentioned here. Copper continues to rise as supply situation deteriorates following Grasper disaster. Okay, so you're going to get news like this. I mean, you can pause it and read all of the reasons why copper is going up, but the real reason is that copper needs long-term supply and they are not building it. So any kind of disruption, okay, in copper supply, for example, this mine right here in Indonesia was, shut down due to a mud rush, the price of copper will spike. Okay, so any kind of supply shock is going to be very, very sensitive right now because we are getting into a shortage. The demand is much higher than the supply going forward. Okay, the projected demand is higher than the projected supply by far. So there's going to be a deficit long term. So any kind of if there wasn't, any kind of mine closure wouldn't affect the price like it has. So you have these kind of mine closures, output going down. This is very bullish for the copper price. Okay. So this is why copper has been going up steadily and will continue to rise. $5 copper is big, okay, making all of these companies that, juniors or majors that are invested in copper mining very profitable, okay, and it will continue to be so. However, another thing that is helping this copper trade, which brings me to my third thing that interested me this week, okay, we're still staying on copper, is that another thing that is blowing up copper is the dollar weakness, okay? And for the dollar, we look at Dixie here. As you can see, going back, this is a very bearish chart. It's consolidating here close to the lows, but if it ever breaks this 96 level, we can go all the way down to 89, around this area here, okay? However, it is consolidating, and you're getting a lot of talk that we're close to a bottom and we're going to go up, and we're at the RSI is pretty neutral. So right now it's consolidating at lows, and it can go either way. Any direction that it goes, it might continue. I mean, it might meet resistance if it goes up to 100 again. But one of the main drivers of this move right here, or I should say one of the main factors that people keep bringing up in FinTwit, if you will, is a lot of people, the smart money is being positioned long in the dollar, okay, and that would be bullish. So people think that the dollar will go up, and which will affect prices like copper and all the commodities will suffer if the dollar goes up, all things being equal. It's not just the dollar, there's other things. I mean, the dollar could go up and the commodity could still go up in price, but it helps if the dollar goes down, and it's a drag if the dollar goes up. So a lot of the people on Twitter and other type of talking heads in the media are suggesting that the smart money is going long the dollar and that you should follow suit. Okay, so the smart money, if we look at the Commitment of Traders report, which is a great resource to look at, the Commitment of Traders comes out every, I think every, you'll see the change every day, but you'll see open interest and whether the commercials or levered funds or any big players in the copper space is reflected in the Commitment of Traders report. For example, if you look at gold, you can see here that the price of gold is here, and we have the green line, the commercials, and the green line is the non-commercials or large speculators, and the red line is the commercials, okay? And you can see that the commercials are net short 300K, and the big, large players are long 266 for gold. But you have this also for the dollar. Okay, currency is the US dollar. Okay, so as you can see here, if we look at the price of the dollar and we look at the top panel, forget the bottom, but the top panel, you see the red here is commercials, which is the big guys, and the green is the large speculators. Okay, and the large speculators tend to go with the price action, and the commercials are the big boys that have like quote unquote inside information, but whatever, it's not always accurate. Okay, so as you can see here, if you do a cursory search, you can see as the commercials were getting short, the dollar topped and went down. Okay, and as the commercials are going long here or flat, the dollar is going up. Okay, here you can see the commercials as it's high start going short and then it goes down. So basically here they're going super long, which is very rare to see, which is what's prompting these Twitter guys to say that the dollar is going to go up, because the smart money now is not only flat, but it's going uber long, historically speaking. But is this the case? I don't know. Let's go back more. This is like a 3-year chart. Let's go to a 10-year chart. Okay? And you can see here like a 10-year chart of the dollar going back to October or April 2016. You can see that here our 3-year chart is very small compared to the overall picture. Okay, because look here, as the dollar was going up and the commercials were going short, it kept going up. So here the commercials were wrong, but it's not really, because the commercials are like guys who like are selling into this their inventory. They're selling their inventory into this, if you will. Okay, so there are many cases where the commercials are wrong. Okay, here look, they started going long here and the price went down after. So the commitment of traders is not an 100% correct ratio metric to use. It does help, but I wouldn't rely on it 100%. Know that if you're wrong, you have stops and they're quick and short. But here, usually when they're long, it starts going up. Who knows? Okay. Now, the problem with this is that even if you're right and the commercials are going long, what is your target? I mean, what if it just goes up from 97 to 100 and then they start going short again? You know, you don't really know what the big move is. Okay? You don't know the magnitude of the move when they are right. It could be very short. And then they quickly go short again and it goes down. And second of all, the dollar is not the end all and be all of trading copper or commodities, you know. It's just one factor of many. I mean, if you just want to trade the dollar as a trade itself, maybe go long and have a short here. But realize your risk reward is not that great. It might be 1-to-1 or 2-to-1 max before some resistance is met. You don't know. Okay, so, but if you're trying to use the dollar as a reason of why commodities are going to be weak going forward in the short term, I wouldn't do that. Okay, so that's it. That's all my take is on copper here, and the dollar and other reasons of why copper is going up. So if the dollar is going up, it might be a drag on copper, but you have other factors like here, supply crunches and an overall supply deficit long term that is fueling this copper rally, and I think it goes even higher. So I have unloaded a little bit of what I bought here, a little bit, because, you know, I have call options that expire, so you want to take profits on the rise. But I want you guys to know that with copper, I am fundamentally long in the long term, or I should say I am fundamentally bullish in the long term. And I always look for places to enter copper on the long side, like we did after this crash. So let's reiterate: SPY, S&P 500, bullish, nothing more to say here. The sentiment is still fairly neutral here and still bearish. Even though the bulls are coming in, there's still a lot of bears that need to be weeded out, have to die out, and they haven't yet, so we're bullish there. And the theme, a long-term prevailing theme that you should be looking at and trying to find excuses to go long, is the Lithium Americas, Critical metals play number one. MP, or I should say that's Lithium Americas is number two. MP materials and rare earths is number one. Trump decided to really support this industry, and you can see it's reaping the benefit of these protectionist policies and the quasi-socialist takeover of government takeover of the critical materials industry. Okay? And of course, copper. I'm liking it long term, and liking it right now as well. So that's it for this week, guys. Let's see what happens next week. Everybody thinks negative seasonality in October is going to play out. Don't just believe that. Don't believe the hype. Let's see what happens. All right. Later.